Dear student, Assalamu alaikum. I hope all of you are fine by the grace of Almighty Allah. I am Mohammad Shahjahan, Assistant Professor, Department of Accounting, Milestone College, Uttara, Dhaka.
Dear student, this is our first lecture on chapter 5. Dear student, chapter 5 is accounts. Dear student, at the end of this lecture, you will be able to explain the concept and features of accounts. You can able to keep accounts using different types of table. You can able to classify accounts as per accounting equation. You can able to record debit and credit in related account as per double entry system. Dear student, at first, what is accounts? Accounts refers to asset, liabilities, income, expense and equity as represented by individual ledger pages, to which changes in value are chronologically recorded with the debit and credit entries. These entries, referred to as posting, become part of a book of final entry or ledger. That means accounts indicate the ledger. This is individual ledger account. Dear student, there are two types of accounts table are used in accounting. Number one, T table. We can tell it is traditional format also. Actually, it is like T, English alphabet T. That's why it is called T table. This type of table divided into two part. In each part, there are 4 column. The number of column is 8. Balance different of debit side and credit side is determined at the end of the specific period of time. This is the characteristics of T table format. Look at like this. T table format is like this. At first you have to write account title, then account code number, debit, credit. In debit side we have date, particular, journal page, taka, and in the credit side we have date, particular, journal page and taka. This is the format of accounts. This is account title. This is called ledger also. Dear student, another format is moving balance format. This is modern format also. One column of each date, particular and JFE. And in this method, we have one column for each for date, particular and JF, and total 4 column for amount of taka. Total number of column is 7. Balance different of debit side and credit side is determined after posting each transaction. Earlier it was at the end of the period we will determine the balance, but here after posting of each transaction we have to determine the balance, and debit and credit amount column is situated by side. Dear student, this is the characteristics of moving balance format. Nowadays moving balance format is used mostly. Dear student, this is the format of moving balance table. Here account title, then account code, then at first you have to write date, then particular, JF, debit taka, credit taka, then balance, debit balance, credit balance. Dear student, now types of account. There are 5 types of account. Look at, there are 5 types of account: asset, liabilities, equity, revenue and expense. Asset, liability, equity, revenue and expense. Dear student, this is most important. There are 5 types of account: asset, liabilities, equities, revenues and expense. Now for determining debit credit, we have a formula. Name of account, debit, name of account, credit. Asset, if it is increased, then it will be debit. Asset, dear student, at first you have to know what is asset. Asset means the things belongs to us and will give us service for long time. That is asset. That means the things belongs to us will give us service for long time. That's it. That is our asset, like furniture, building, machineries. These are the asset, and if asset increases in the business, then that account will be debit. And on the other hand, if asset decreases for selling or for any other reason, then asset account will be credit. Asset account will be credit. Dear student, and liabilities, if it is increased, then it will be credit. If it is increased, then it will be credit, and if it is decreased, then it will be debit. For liability means which things we are bound to pay. Liabilities means the things which we are bound to pay, such as if you took loan, then you have to pay the loan in time. If you purchase on credit, then you have to pay it. That means this is our liability. Liability means accounts payable, loan, any expenses due like due salary, due rent. This is our liabilities. So liabilities account increase credit, decrease debit. Now equity. Equity means the money of owner. That means whatever the things of owners in the business, that is equity. If equity increase, then it will be credit, and if equity decrease, then it will be debit. That means equity increase credit, equity decrease debit. It is a formula like liabilities. Then revenue. Revenue, that means this is our income. This is our income. Whatever things money we earn, that is our revenues. Like by selling, we have earned. That's why sales is our revenue. Interest received, that is revenue. Commission received, that is revenue. Rent received, this is revenue. That means this is our income account. And income account formula also like equity and liability. If it is increased, then credit. If it is decreased, then it will be debit. And lastly, expenses. Expense, if it is increased, debit. If it is decreased, credit. Expense account increase, debit. That means by which we will receive short term benefit, that is our expense. By which payment we receive short term benefit, like purchase, salary, rent, we receive short term benefit. This is our expense. And expense increase, debit, decrease, credit. Thank you very much. Allah Hafiz.